Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at Facebook on the daily, weekly, shorter term time frames. So it's been very boring for the Facebook Bulls and the Bears. We've been in a pretty tight channel and it's only getting tighter, but there will be a break, there will be a spike in volume, and there will be a spike in volatility sometime, in my opinion, in the next 2 weeks. So we have our high and our low, lower high, higher low, lower high, now a higher low. So it's getting really tight looking at the last 3 days, but I'm really concerned with 130.73 and 126.80. That's my range I'm watching right now. The most recent clear higher low and lower high. And then once we get a break, we'll look back at the wider range where we had that original market dump, bounce, and key levels to be watching there. So the volume was pretty good today for the Bulls. End of the month, end of the quarter, and the lower wick showing the Bulls buying the dip. We set a new low over or below the low of yesterday by 10 cents. But then the Bulls bought that dip, rejecting from the middle Bollinger Band and the 10-day moving average resistance. We've been back and forth over this level over the past 6 days, so not putting a ton of weight into those moving averages because the price is going so rapidly back and forth over them. I'm more concerned with those two price levels that I just pointed out and that range. So the weekly time frame for Facebook, you can see it is certainly still bullish. 10-week moving average support, 126.14, hasn't been tested in a long time. Bulls are still very much so in control. So really, it's only day traders that are bored with Facebook. Long-term investors are loving what it's doing to their portfolio and no reason for them to think of getting out. So keeping an eye on the volume, this volume spike might be attributed to the end of the quarter and the end of the month, like I said. So definitely watching for volume spikes to see clear breaks. Here's a very similar pattern where we had our high, our low, lower high, higher low, tighter and tighter. And in fact, now that I'm looking at it, it's the same thing. So the gap up here, the big high move, pulled back, established support, lower high correlated with that lower high, higher low, and then we got tight for another, let's say, 6, 7, 8 days, and then the clear breakout occurred, and then we saw a really strong breakout. So keep an eye for that similar pattern. The trend does favor the Bulls, so we'll be looking for a bullish breakout, slightly favored over a bearish breakout. And again, within 2 weeks, 10 trading days, I would say we're going to get a clear break in the same manner. Not sure if it will be in that direction. And again, I say the slight odds favor that direction, but we'll need to wait and see that clear break. And you can see how clear the bull break was last time. Bull break, consolidate for 2 days, and then big time break. So let's look at the 5-minute chart and how we traded today. Big bearish start right out of the gate. Long bullish reversal candlestick. Didn't see much bounce, but we back tested that level, 127.45. Double bottom at the low of the day. Now it's time to start paying attention for a turnaround when you have a double bottom. And the trend clearly changes. I'll point it out here. So there's your double bottom, W-shaped bounce, higher low forms. You could be looking to get in here if you were buying anytime here for a bullish position. You put your stop loss just below the double bottom low of the day, and you're looking for the bulls to break the lower high pattern. So this high was up at 128.02. As soon as this second candlestick on increasing bullish volume broke that pattern, you now have a double bottom and then a higher low and a higher high, reversing the lower high and lower low trend that started the day. From there, we see increasing bullish volume continues. Big strong move to the upside, pulled back, stayed within this range. You can see the 100 period support, 200 period resistance got tighter, tighter, tighter before a bullish break. Bullish break of this little pattern, and again, you don't even need to draw your trend lines because the moving averages are doing it for you. And then we saw over an hour break to the upside for the bulls, and we finished strong. A lot of the market dumped off in the last 10 minutes of the day, and Facebook did not. So that's worth noting. And heading into next week, we'll see if some of that strength carries over, and I take it back. I was cutting out the last candlestick, and I figured that was the case. So we did have that dump with everybody else right at the end of the day, and very strong until that dump. And we did hold the 5-minute supports into the after-hours session. So that's where the rejection right there from the 10-day and the middle Bollinger Band resistances occurred. And again, the whole market dumped there. That wasn't specific to Facebook. So we'll see how we end up. And again, tightening range. Don't let those options time decay eat away at you. Wait for the break, then make your trade. And if you're bored, find another ticker to be playing that has some nice volatility. And just keep your eye checking in on Facebook waiting for that clear break so those option decays don't eat away at sideways horizontal trading. I appreciate you watching. Thanks for the likes and the shares. Have a great long weekend. And it's not a long weekend, but you can make it long by counting every second.